as Federal Reserve Chair Jerome Powell prepares to face the music on Capitol Hill this week. All eyes are on the central bank's intricate tango with stubbornly high inflation. In the grand ballroom of monetary policy, the Fed's moves are being scrutinized with every step, as it tries to guide the economy towards a soft landing without sending it crashing into a recession. For months now, the Fed has been locked in a tense embrace with price pressures, raising interest rates at a feverish pace in an attempt to tame the inflation beast. But as the data dribbles in, it's becoming increasingly clear that this dance is far from over. The latest employment figures have revealed a slight uptick in the unemployment rate, now standing at 4.1%, a level not seen since the latter days of 2021. While still historically low, this nudge upward has some policymakers wondering if the Fed's aggressive rate hikes are beginning to take a toll on the labor market's robustness. Compounding matters, other economic indicators are flashing amber warnings about a potential slowdown in growth. It's a delicate balancing act for the Fed. Cool off inflation without extinguishing the economy's flickering flame. As Powell takes center stage this week, he'll likely face intense questioning from lawmakers on why the central bank remains hesitant to cut borrowing costs, even as evidence mounts of softer economic conditions. After all, the Fed's mandate is a duet, promoting maximum employment while keeping prices stable. But Powell's measured steps suggest the Fed isn't ready to switch tunes just yet. In his testimony on Tuesday, the Fed chair acknowledged that recent data hint at inflation edging back onto a downward path, but emphasized that he and his colleagues need to see that progress sustaining before they can consider easing up on rate hikes. The upcoming June Consumer Price Index data, set for release on Thursday, could provide crucial clues about whether that downward trajectory is solidifying. Economists project that the so-called core CPI, which strips out volatile food and energy costs, will rise a modest 0.2% for the second consecutive month, the smallest back-to-back gains since August. The overall CPI is forecast to inch up just 0.1% from the previous month, translating to a 3.1% annual increase, the most subdued yearly advance in 5 months. If these projections hold true, it could offer the Fed some respite, suggesting that their aggressive dance moves are finally starting to bear fruit. But as any seasoned dancer knows, it takes two to tango. And in the intricate choreography of economic policymaking, the Fed must also consider the steps of its global partners. From China's flirtation with mildly positive inflation news to the Reserve Bank of New Zealand's potential pivot towards rate cuts, central banks around the world are eyeing each other's moves, trying to stay in sync with the ever-shifting economic rhythms. Closer to home, the aftershocks of France's parliamentary election runoff and the UK's own electoral shakeup have added new wrinkles to the economic dance floor. As investors parse the potential impacts on public finances and policy priorities, the reverberations could influence the Fed's calculus. Through it all, Powell must maintain a steady hand on the tiller, guiding the economy through this treacherous terrain with deft footwork and unwavering poise. It's a high-stakes performance, one where a misstep could send ripples through financial markets and upend the fragile recovery. As the music swells and the spotlight intensifies, the Fed chair's testimony this week will offer a glimpse into the central bank's choreography for the months ahead. Will they signal a pause in rate hikes, allowing the economy to catch its breath? Or will they continue their dogged pursuit of inflation, even if it means risking a stumble on the path to a soft landing? In the grand ballet of monetary policy, every move carries weight, every gesture holds meaning. And as Powell takes his place on the congressional stage, the world will be watching, trying to decipher the Fed's next steps in this delicate dance with inflation.